All right, good evening. Welcome back, traders, to the YouTube channel. We're gonna have a little fun today. So I'm going to cover down on a few things. One being a recap of today's trading and why I took it and how those went. I'm also going to cover down a few terminology, terminology with a smart money concept. On top of that, I'm going to also speak to some of the tools that I have. I highlighted a little bit from the last video. I'm going to go a little bit more in depth on order book, footprint charts, the delta, as well as the volume profile. So all these tools I use, I feel like gives me a little bit of an edge, and I wanted to share that with you. So without further ado, let's dive right in. All right, so I assume if you've been trading or scalping specifically the futures, you probably heard of order book and the depth of market. So the order book is also market depth. It gives us crucial information about supply and demand dynamics, but in real time. This allows us to monitor limit orders placed by buyers and sellers and gives us a little bit of insight on where the market is likely headed next. So we're also allows us to anticipate potential price movements and take advantage of favorable trading opportunities when we look to scalp, scaling down onto a smaller time frame. On the image in front of us, I have the by the book definition straight out of Investopedia, and then off the images off to the right are the depth of market graphic. So the far right is what I look at. It's a depth of market provided by NinjaTrader. It gives me the volume, the price, the bid and the ask, the histogram of the total sales at each price level, as well as a strength indicator from the momentum at that given time. So like I said, this is all real-time information on limit orders that I can monitor and gauge the strength of the momentum at the time before placing trade. So another tool I use is the footprint. I think bar charts have their place, but there's something about footprint that gives me a little bit more insight on the action in between. So obviously the candlestick or your normal bar charts, they give you the open, close, high, low. So you have all that information in there, but when you scale down inside of it, what's actually taking place? So if you're able to read both the depth of market and then track the orders that went in, you're able to identify areas of actual support and resistance. So supply and demand, where these levels were highly defended previously, and if those buyers are still in the market, where they're likely to continue to defend. So footprint, so by the book, footprint will provide us with a visual representation of the trading volume, but at each price level. Analyzing the footprints, we can identify significant levels of buying and selling pressure, and then look down at the delta imbalances that help us understand the intentions of smart money players that enable us to align our trades with their strategies. It's an extremely powerful tool. I highly recommend utilizing this specific tool in your trading process as you maneuver through the markets. All right, so next here we have delta and the volume profile. So off on the left, I have volume delta. Off to the right here is the volume profile. So delta indicators, like the one I have here is a cumulative delta, gives me additional information and also helps confirm signals, especially when I'm in a trade. So these indicators measure the difference between buying and selling volume. It helps me identify when the market sentiment is shifting, and I recognize that change of character or break of structure when I determine those potential trend reversals or a continuation while I'm in the trade or potentially about to enter a trade. A unique strategy that I've also incorporated on the volume delta is marking out imbalances, areas that have been defended before as a may not align uniquely with the actual price at that time, but the delta has a strong tendency to defend its previous level. Now with order flow, I'll go a little bit further in depth with the order flow volume profile, this image here, but this analyzes the distribution of trading volume over a specified time. So for my chart specifically, I have it on a half hour bar, but it allows me to measure those levels and identify how price action is going to happen. So when I incorporate this with the depth of market, I could see how specifically on this specific 30-minute candle, how price pushed up, and how it pushed up initially, and it was being held off by sellers, and the price wasn't pushing. This is again confirmed by the depth of market. I can see this actually taking in place real time, and then I can see how price sweeps back through these low level areas, give me a great opportunity to short the market at this point at 14,500 and take it down into a higher level of volume. All right, so if you're part of the Discord, there's probably some terminology that I've thrown out there that helps me quickly put out trading opportunities to our Discord that you might not recognize. But it's very important to familiarize yourself with terminology, specifically with smart money concept trading. Like specifically, the change of character is a shift in market behavior. It's often accompanied by a noticeable change in volume or price action, which you can also identify on any of the tools that I previously mentioned. On another one is a break of structure, BOS. It occurs when market violates a previously established pattern or a support resistance level. These breaks can provide valuable trading opportunities if identified correctly. So off of those areas, and I'll get more into it on the recap, I'm able to identify imbalances and taking advantage of the smart money concept. It gives me a range of interest. So POIs, as I've had in recent videos, give me an area where I want to trade. And I look at this at a higher time frame. And as price comes back into that area, I shift back into my lower time frame, like the 1 minute, and then I start focusing a little bit more on those other tools from my earlier slides: the delta, the volume profile, the footprint, and the order book. So utilizing all these tools, I know it's a little hard, but it takes a little practice. But once you get it down, your trading proficiency, the effectiveness of how you actually trade, it is extremely enhanced. So obviously the more you practice, the better you start becoming, but it all starts with kind of knowing the terminology, probably spelling words correctly here, but at the end of the day, hey, take a screenshot of this if you're part of the Discord community here, and I'll keep continuing to post those trades. Today was a great day. I think it's time to get back into that recap. All right, so my first trade of the day just happened to be at the market open. I don't typically take those trades, but the opportunity to take a long position presented itself, as we saw here in the previous 8:30, as we saw some balance set up here in the London session with a little bit of a sell-off. So there's I forget the exact name of this. It's the Judas swing. I think that's what it's called. Basically, it's an imbalance. We got the sell-off into a liquidity zone. So we tripped the liquidity that we had here. We saw the expansion, leaving some resting liquidity. You can also identify all this footprint as well as the depth of the market. You can see how buyers heavily defended this area as we snap back through, push back up. We had that change of character, the market structure shift. But this happened in such a dynamic way. We left a massive imbalance here. So for my trading strategy is, as we come back into this level, this 14,506, I'm going to key back in on that smaller time frame, go back to those other tools, and pinpoint a thorough entry. I already know the target I want to take. I know my stop loss I want to have. Now the last bit here is, when do I enter? So on this trade here, I didn't take anything right off the bat, as we didn't come back into the area right at market open, but around 9:35 We came right back into that level. Price basically stalled and then pushed right back up. Now, the reason I took the take profit here is I like scalping the markets. I'm not trying to take a wide swing yet until the market actually develops, which it inevitably does for the next trade. So that next trade, we came back in, we retested that level, and then from the depth of market and the footprints, I felt pretty confident that if we were to break down low, break some structure, and then bounce out of this zone. So this is a buyer's hold area, right? And this is all given to us from the tools I've talked to you about. We created an imbalance, figured if we come back into the imbalance, I'm going to take this thing long. We had a massive sell-off, leaving a lot of imbalances to fill on the buy side. So I put this out in the Discord community. We end up getting the fill right away, right around 10 o'clock. And you could have held this thing. I believe it ran 400 ticks. Good amount of profit. Obviously, if you could hold on to a little bit through some of this choppiness, but we're still drifting up, right? Now, as we drifted up, we had a nice pullback, heavily defended by buyers, with a quick expansion and a displacement over to break structure. Well, usually when you have that, you take this order block, as I've shown you how to do in previous videos, span it through. I'm gonna wait for price to come back down to this. I'm gonna take it back long. Before I do that, I'm gonna scale back into my smaller time frame, open up, make sure I'm watching the DOM, watching the footprint, and watching the delta. Anyway, price continues to move up. Mark out areas where I think liquidity would be resting as we come back and scalped a couple. I'm not going to go into those too much. I think I end up taking one loss. I got a little faked out here as price came up to this level, wicked down, came back, and I took it short. My stop loss was right above the high. So I figured if it was going to continue to go higher, I'm going to get out of this trade with a small loss, which ended up happening. Now, as market did break structure, we have a market structure change, or we call it a chach, as price kind of broke below recent lows. Now, we didn't just sweep the liquidity on the bottom side, we displaced through it. Came right back down, and then started trending back up. Now, the original entry was to come back, either fill the imbalance left right here, or one higher. So the entry was going to be somewhere in here, and I was going to find that entry based on those tools. However, we're pushing through, make a weak attempt up. Now, if you're watching Delta at this time, there's a massive drop in Delta, which indicated to me like, okay, it's time to start looking short, and it's not going to make its way up here to that 680 level. As soon as we broke this trend, pulled back into it, I just took it short. As soon as we bottomed, we broke the open from the previous candle. Now I'm targeting this level that we created. So this is an order block from our AM session. Pulled back right into it, and that was my take profit area. The next trade I took, as price was heavily defended on this order block, which I assumed it would be, it expanded way up. We broke structure, as this was the recent high. Click on that. So that's your recent high. We expanded through it, pulled back, created a little bit of imbalance, and then kept running up. If we pull back into it, I alerted this in the community. Hey, let's take this long at this imbalance. We have a stop loss just below that fair value gap, and we'll expand right off the initiation of this drop off. And you can see this both in volume profile as well as in the deltas. So as delta continued to shift, started slowing down, came right back into a support area, and then made its way back up. And I just took advantage of that imbalanced fill, bounce, strong support off the DOM, and took that one long for a quick scalp. Last trade of the day, I was looking for a bigger move, but we're getting towards the end of the day. I didn't want to hold it overnight. So what I was looking at here, and this is where I'm going to pull in, I'm going to pull back that graph. I'm going to show you what I was looking at as far as the depth of market. and then the not the depth of market, but the volume profile, and why I decided to hold on to this trade. I want to say I entered it on this second pullback. We had equal highs. Now, price kept going up, right? So it kept moving up. But if you pulled up if you look at the delta was steadily dropping. So I knew that although price was going up, sellers were starting to take control of the market. And I'm gonna pull over the volume profile for this half hour period. So as you pull up the volume profile, we're up in this range, right? Volume pushed up through and then immediately pushed back in. Whenever you get out of this area here and you have this large volume, these are buyers that started chasing. They got FOMO. They start chasing the order, and price snapped back down. And so what they do is they recovered, they sold, they got stopped out. We got a nice push lower into this high volume area right around 504. So it was a short, sweet trade. Started going against me a little bit in the beginning, but I was able to hold confidence. You can see it spike up. I was able to hold this one strong. So I know that with the delta pushing lower, we end up getting a massive drop on the delta. Between that and the volume profile, it was kind of a no-brainer to hold on to this thing and see it through for was that 56 ticks. Let's see if I can find this thing on the delta before we wrap this thing up. All right. So you can see the delta kind of going up. The price, there's a little bit of divergence in the price in the delta. And then as delta started topping off here, we can see a strong push down right before we got that massive push down to our target. So using tools like this are incredibly beneficial when confirming your position, making sure you got that right trade, and then also sniping your entries. All right, so now we've had that refresher. You've had a better understanding of the essential concepts and the terminology from the recap and then the previous slides. By applying these principles, we're able to identify highly probable trade setups and capture some significant market moves. This approach empowers us to trade alongside the smart money players, increasing our chances of success. So that brings us to the end of this video recap and our trading journey. I hope you enjoyed the overview, and I hope you found this somewhat value, especially as you start to grow your trading experience and from others, and then maybe look towards honing in on some other skills and then adding to your tools. So if you're not already a part of the Discord, highly encourage you to join. The link's going to be in the comment section. If you got any questions, feel free to DM or leave a post. Would also, if this video has had any significance to your education and trading, would appreciate a thumbs up and a subscribe. All right, till next time. Thank you.